Good morning, everyone. I hope you're all doing well and have a good trading week so far. So, of course, yesterday in our market run through, or this week, we've talked about obviously the FOMC. Yesterday on Wednesday evening, we had very, very aggressive moves initially. And then, of course, the overnight movements in the markets as well, which we'll be looking at now shortly. We do also have today the Swiss National Bank, which raised rates this morning by 50 basis points. We'll talk about that in a second. And at 12 o'clock today, in the next hour or so, we do have the Bank of England coming out with their current projections for interest rates. So, of course, we're going to have a busy day today. We do have the ECB even after that at 1:15 local time here in the UK. So, of course, all eyes on the price action over the next few hours because these fundamental events will obviously move markets. Now, structurally speaking, if we look at yesterday's interest rate meetings and this morning, we did get that 50 basis point by the Fed. Now, if we look at the initial price action was quite absorbent to the downside. Okay, so we had that initial move last night on the Nasdaq here. On the indices, we went from kind of 12,000, 11,950 back to 11,700. So we got Nasdaq, we got kind of 250 point sell off literally within minutes. The Dow Jones, Wall Street, we got kind of 350, 400 point sell off within minutes. Even the S&P as well. As you'll see in a second, it got a fairly significant sell-off initially last night, and it did erode and did come back to that kind of 4,000 level. But then overnight, we saw that continued sell-off. We saw that continued slide lower through the Asian session to where we're currently sitting at this moment in time. So the S&P from yesterday evening sold off actually very, very quickly off that 4,000 level. And of course, the Nasdaq, the Dow Jones, etc., have all followed suit. You can even see it there as well. Nasdaq has slid back into some of these lower levels of the region of the zone over the last weeks. And similarly, again, with the Dow Jones, it has continued to slide. We had that massive sell-off deepening last night, and we've seen that continued slide this morning ahead of, as I said, the Bank of England in the next hour, and of course the ECB as well. But that's not just immune to the US. If you look at the FTSE, you look at the DAX, the FTSE has slid again, even particularly from Tuesday's CPI. It's drifted lower, although it is making a little bit of a resurgence into the meeting. The DAX as well, it had some aggressive moves last night. And of course, if you look at a 1 hour chart or even a 15-minute chart, you would see it as well. Yesterday, that deepening slide last night, of course, on the FOMC, and that continued to slide this morning back into some of these levels. So of course, it's important to factor that into consideration. We've taken the manipulation on the upside. We're now breaking back into some of these local lows as well. So it's important to look at that. So with all of these different orientated indices, risk assets is what I kind of put them into the same basket of pool. You also have to look at the performance in the likes of the VIX, the dollar, because they are your hedging or recommendations for hedging. Now, of course, yesterday we had the lower lows. We've had that continued sell-off on Tuesday, off the back of the CPI. However, yesterday, off the back of the FOMC, the markets is recovering back up nicely. So naturally enough now, given that we've created new bearish order flow on the back of the CPI, it's not completely inconceivable to see the dollar rally back up to this level. And of course, you have an order block coming in here just underneath 105 at about 104.85, 104.90. So the likelihood is you're probably going to get a relief rally back up into this region. Now, whether that plays out or not today, let's wait and see. But there is definitely a clear shift in sentiment today from risk orientation in the equities, in the indice markets, out of those into safer havens like the dollar. And of course, what goes down must come back up eventually. And that's exactly what's happening. We've made new bearish order flow initially in the early parts of this week. We're getting our midweek reversal on the DXY, and we're starting to see some strength. So of course, as the dollar strengthens, that's going to affect Euro USD. Okay, if you look at Euro USD or GBP USD, you'll see those markets slide. Okay, if you look at gold, for example, right, gold has slid very, very heavily from last night. So we had that initial break. Then, of course, gold this morning has dropped some $30 from where it was trading last night, right? Dollar yen, cable, euro dollar, all of these visible moves. So euro dollar yesterday had that very, very clear spike, and it's now eroding back down. So of course, with that DXY weakness and the resurgence in DXY strength, we're seeing the euro dollar come back down into this previous region we talked about all week between kind of 105.50, 106. Same again with the cable. Cable had broken up initially yesterday. It is now coming back down. So it's important to look at that consensus. Now, as we look at the Bank of England now at 12 o'clock, for those who are following the fundamentals more closely, okay? So at 12 o'clock, we have the interest rate decision by the BOE. So whether they're going to raise by 25, 50, 75 basis points, etc. Now, the Fed has raised by 50. The Swiss National Bank has raised by 50. The consensus is for 50 basis point increase or 0.5% increase by the Bank of England, and also another 50 basis point increase by the ECB as well. So the markets are expecting everyone to raise by 0.5. So of course, if anyone goes by 0.75, that's a hawkish move. So if that's a hawkish move, you'll probably see volatility in the FX markets. You'll also see volatility in the indices as well. If it's only 25, you'll probably see actually the opposite. You'll probably see indices doing quite well. You'll probably see the FX pairs having a little bit more volatility on the other side. So it's just important to look at that broadly speaking. Okay, so at 12 o'clock, we have the interest rate decision. We also have the breakdown of the voting, right? So there's 9 voting members in the Bank of England, right? So naturally enough, at this moment in time, if you go back to previous meetings, there's been a wide varying viewpoint between the different members of the BOE, the MPC, okay? So I think last time it was either 5-4 or 6-3, something like that. So what that means is there's a bit of indecision and indecisiveness within the Bank of England. The more indecisiveness, the more indecision, generally the negative that is, because you want to have everyone singing off the same hymn sheet. You want everyone giving the same conclusion. If you look at the Fed last night, there was 19 members in the dot plot. 17 of them had pretty much the same viewpoint. I think there was a couple of I think the one was slightly more hawkish and one was slightly a little bit more dovish. But other than that, the 17 of the 19, the overwhelming majority had the same viewpoint. The problem is with the Bank of England, that's not necessarily the case. So you just have to be wary of the voting between the different 9 members, okay? And then, as we said, that then brings us to the ECB. So the ECB, 1:15, we're going to get the policy statement. There's 2 interest rates to look at in the ECB. There's the deposit facility rate, and then there's the main refinancing rate, okay? So at this moment in time, the deposit facility rate is 1.5%. They're looking to increase that to 2. The refinancing rate is 2% currently, and they're looking to increase that to 2.5%. So really and truly then, as we look at our economic calendar here on the dashboard, the 2 considerations over the next couple of hours or so is whether the ECB goes from 2 to 2.5%. Likelihood that's going to be the scenario, and the same with the Bank of England. Now, if you go into the analysis section here, you will see every previous rate increase for the last 18 months. So up until pretty much up until about February this year, markets weren't really moving that much. And over the last 18 months, there's been one occasion where they've raised or decreased higher than what the consensus is forecasting. Every other time, it's been pretty much as expected. Now, of course, in September, it went to 2.25, but at this moment in time, of course, today, we are sitting at 3%. So in the most recent meeting, they raised from 2.25% in September to 3%. Now it's a case of, are they going to get another 0.5% here in December and raise rates from 3 to 3.5%? That looks very much like the expectation, and the expectation as well for that. Now, that is the Bank of England. If we look at the ECB at 1:15, of course, we have the ECB statement at 1:15, and then we have the press conference at 1:45. But in the middle of all that, we also have a raft of US data. And of course, we have data at 3 o'clock as well. So it's going to be a bumper afternoon, right through from 12 o'clock in the next hour or so, all the way through till kind of 4 or 5 o'clock today. It's going to be a busy afternoon because you've got the UK, you've got the ECB, you've got US data in between, you then have the US Open, and then of course you have more US data after noon as well. So it's going to be volatile, it's going to be up and down. So just be aware of the volatility when you're factoring in the position sizing. So then when we look at the ECB as well, the ECB has been net neutral till June. Of course, in July, it raised by 50 basis points. Then it went 75 basis points in September. It went another 75 basis points in October. And that, of course, brings us into the current rate meeting, of which we're expecting another 0.5%. So that, of course, means that between July and December, they've raised 2.5% in the interest rate. So that's obviously very, very quick movement over a short period of time, which shows that the ECB are aggressive in their approach. But of course, today, let's see whether they'd go 50 basis points or do they go even higher. If you see 75 basis points today, that's going to be a hawkish move, and you'll probably see the indices come back because it's a more aggressive move than what the markets are pricing in. Therefore, the indices will probably sell off more deeply because of that. So just be aware of it. Also as well, if you're looking for volatility in the markets, look at the VIX, right? The VIX is a very, very good and useful indicator in terms of looking at the rationalized price action. Now, of course, if you look at the last, let's say from the beginning of December, we had a pickup in volatility, but of course, with the movements over the last few days, the VIX has been very mixed. So I suppose that is also something to be very, very aware of over the next day or so. Do we see the VIX rally from these 2021 levels like we saw at the beginning of December against what's been a kind of a couple of days of indecision for these markets? So that's kind of where we are at the minute, folks. So really all eyes on the prize Of course, we will be updating in the next couple of days as kind of get more realized functions. So, of course, gold is on the back foot. Your DXY is starting to make a little bit of recovery today. Your indices, broadly speaking, are trading lower, right? So you're seeing the S&Ps trade lower. We're seeing the Nasdaq, the Dow Jones, the DAX, the FTSE, etc. All of those markets are all trading lower. And even in oil as well, which is something that we don't look at quite often, oil has seen a massive recovery on the $70 move off of this daily order block. So if we go back out to the daily order block from December of 2022, which is the beginning of the bullish momentum in oil last year, you will see that the oil prices has returned all the way back to that daily order block. So we've gone the whole way up, we've mitigated, the price action has come all the way back down, creating bearish order flow all the way back down to this level. And we're in a structured phase now over the last 6 weeks or so of bearish order flow. So lower lows, lower highs, lower lows, and oil is pushing back into this 80 level again. So it's worth keeping an eye on that for those who trade the commodities as well. All right. So that's pretty much where we are for the minute, everyone. So really just all eyes on the price action over, as I said, over the next few hours or so. Looking at all of the different movements, I suppose with anything, I would say focus on 2 or 3 assets. I would say you're better off focusing on 2 or 3 than trying to divide your time by looking at 10, 12 different assets, okay? And it's important to have clear structure in your approach, clear risk management as well. Otherwise, it could be very, very difficult that if you get caught on the wrong side, you could be in trouble to try and get out of those positions. So just bear that in mind as well. So busy day, busy afternoon with plenty of data coming out in the next couple of hours. And of course, we will update you all once the markets has settled. Once we get all the information, of course, we will be posting the information like we did last night for the FOMC. So all of the fundamental data will be pushed through into our institutional data channel within our Discord as well. All right. Have a great afternoon, everyone. Trade safe.